Good afternoon and welcome to today's Facebook Live from Employers for Childcare. My name's Aoife and I'm joined by Chris, who is our Senior Family Benefits Advisor, and he's going to explain what some of the announcements from last week's budget might mean for you and answer some questions that our team has received. We know this has been such a challenging year for so many. So remember, if you would like personalised advice on what financial support you and your family are entitled to, our team is here to help. Just call free phone 0800 028 3008. So Chris, first, can you tell us a bit about the extension to the furlough scheme, as that was one of the big announcements from the budget?
Yeah, well, now we know that the furlough scheme has been extended right through until September. And obviously that reflects that it's still a difficult time for both employers and employees. It will still be 80% of average earnings that employees will receive, and they have to have been employed by the 2nd of March in order to be eligible for that extra furlough pay. Employees can be furloughed flexibly, and you do not have to be furloughed in the past. So someone who has not yet been furloughed could still access the scheme at some point in the future if there's a change in their circumstances with them as the employee, or indeed their employer's circumstances. There is a change, however, for employers who from July will have to pay 10% of the cost of the hours not worked. And then for August and September, this rises to 20% of the hours not worked.
Okay, thank you for that, Chris. And I know we had a question about this. So can someone, say a parent or a carer who's struggling to balance work with caring responsibilities, can they ask to be furloughed?
Yes, absolutely. They can ask to be furloughed. However, it's not an entitlement that their employer has to furlough them. But certainly there's grounds to speak to your employer and ask if you can be furloughed, not just because of issues with the employment, but also issues at home if you've caring responsibilities because of children or other people who live with you, who you care for. Some employers obviously will be unable to put you on furlough because of the type of work that they do, but you may be able to discuss with them flexible working or other arrangements that could help with the home life balance.
Okay, that makes sense. And if someone is on furlough, can they still receive other forms of financial support if they're entitled to them?
Yes, absolutely. In fact, because furlough means that there is a reduction in earnings, some people who may not have been eligible for anything may actually become eligible because of that change in circumstances. And obviously over this period of time when furlough has been available, lots of people have had other changes of circumstances, such as babies being born or starting to use registered childcare, that sort of thing. So actually being on furlough may result in you being eligible for some more support, such as universal credit. However, you'll still be being treated as working your normal hours. So if you're at 80% and not in work for the full time, you'll still be treated as working 100% of your hours, and your normal salary before furlough will be used for calculating childcare support, such as through tax credits or universal credit.
Okay, thanks, Chris. So if anybody has any queries about furlough, maybe they're on furlough or are thinking about asking their employer to put them on the scheme, they can certainly come and talk to you or one of the team. So there was also an extension to support for those who are self-employed. So can you explain what someone who is self-employed may be entitled to in the coming months?
Yeah, certainly. So there's been a number of grants that have been available to the self-employed. So the first grant that's becoming available is actually the 4th grant in the series of support that have been across this period of time. And it's all through the Self-Employment Income Support Scheme. So the 4th grant looks at eligibility based on the self-assessment tax return for the tax year 2019 to 2020. And that will be available to claim from late April. Okay. Once again, you have to be trading, but have a reduced demand due to coronavirus, or perhaps have been trading but temporarily are unable to trade due to the coronavirus again.
Okay.
And the amount that you receive is 80% of 3 months average trading profits, and that's up to a maximum amount of £7,500. The fifth grant then is actually different to any of the other previous grants. Now that's obviously reflecting the future hope that the economy is going to be reopening. And it's actually covering a 5-month period from May to September 2020, rather than all the previous grants covering a 3-month period.
Mm-hmm.
That takes into consideration what percentage your turnover has decreased between April 2020 and April 2021. So if you have had a decrease of 30% or more, then as before, you would receive 80% of 3 months average trading profits, again to a maximum of £7,500. However, if your turnover has decreased by less than 30%, then it would be 3 months average trading profits up to a maximum of £2,850. These grants are likely to apply to more people who, just because they have been recently self-employed, as it now takes into account the 2019-2020 tax year into consideration.
Okay, thank you, Chris. I think that's really complex. So again, just to remind anyone who's listening in, you can contact our team and talk through your situation with them. So our service, it's free, it's confidential and impartial. Just call 0800 028 3008, and whatever your circumstances, we're here to help or to talk you through what financial support is available. So moving on then, we've had some questions about the changes to universal credit and tax credits. I know our charity and many others were calling for the temporary increase to these forms of support that was introduced at the start of the pandemic to be made permanent. So Chris, can you tell us what was announced at the budget?
Yeah, so firstly, to cover universal credit. So the £20 per week uplift in universal credit has been extended for a further 6 months. So that will run until the end of September.
Okay.
That £20 is paid automatically. It's already included in your universal credit calculation.
Mm-hmm.
And it is part of the standard allowance. So that's where it figures within the calculation for universal credit. And that, because it's a £20 per week, it comes in the form of £80 per month across those first 6 months of this tax year.
Mm-hmm.
For working tax credits, because it is normally calculated right across the full tax year, it's more difficult for them to make a change in that way. So for working tax credit claimants, they will actually receive a one-off payment of £500. And again, nobody needs to do anything in order to receive that. HMRC will know that you're in receipt of working tax credits, and you'll receive that £500 one-off payment paid directly into the same bank account as you receive your normal working tax credit payment. And that £500, it doesn't count as any income, etc. It's just seen as part of your working tax credit award for the year.
Okay, thanks, Chris. And I think it's probably just worth reiterating again, if anyone is in receipt of universal credit or working tax credits, they don't need to do anything to get this support, but they can, of course, call and speak to you or to a member of the team if they have any questions. So I know there were a few other announcements designed to support people on a universal credit. Can you outline some of those for us as well, please?
Yeah, and these are perhaps a bit more complicated to explain. And they don't apply to everyone who is in receipt of universal credit. So the first one is directly linked to people who are self-employed, and it's the suspension of the minimum income floor. So the minimum income floor is where universal credit treats some self-employed claimants as if they had earned the national minimum wage for the number of hours that they are expected to work. even though their actual earnings are less than that, they're still treated as earning that amount, and therefore the calculation of the universal credit is done on that higher amount than they actually earn. So to help claimants who have lost business during the pandemic and have seen their income reduced, the minimum income floor has been suspended. The budget announced that although it was due to be reintroduced, it's going to continue to be suspended until the end of July. The next thing is called surplus earnings. And surplus earnings is when if someone's earnings have reached £2,500 above the level where their payments would normally stop in a single month, then they're treated as having surplus earnings, which actually get carried over and affect future awards and can have the potential to affect future awards for up to 6 months. So the surplus earnings rule at its current level has affected people who are self-employed and have been in receipt of the self-employed income support grants, because they have been paid as a single amount up to the £7,500 that were mentioned previously. The government had planned to reduce the surplus earnings threshold from £2,500 down to £300 within this tax year, but that change has now been delayed through until April 2022. So anybody who's claiming the 4th and 5th grant that we spoke about earlier will still be able to benefit from that change to the surplus earnings rule. Although it might still affect them, it'll not affect them as bad as it would have if the changes had been brought in as previously announced. The budget also brought forward some previously announced changes to the way that universal credit advances and other debts are being recovered. So instead of universal credit advances being recovered over 12 months, from April 2021, they'll be recovered over 24 months. Obviously meaning that the amount that people are losing out of their ongoing award is reduced as the amount is being paid back over a longer period of time. And also the maximum amount on these deductions and other types of debts that can come off your universal credit award is reduced from 30% down to 25%. So all those changes mean that universal credits can keep more of their standard entitlement than otherwise would have been the case.
Okay, well, that sounds positive, Chris, but it also sounds very complex again. So if anyone has any specific queries about this, please don't hesitate to give Chris or give the team a call. So finally, I recall there was a change announced as well in relation to the national living and minimum wages, as well as the annual uplift. Is that right, Chris?
Yep, that's true. So as well as the rates increasing from April 2021, as was announced previously, they've also changed the age at where anyone who is over 23 rather than over 25 is now entitled to the national living wage, not just the national minimum wage. So previously it was for over 25s, now it's for over 23s, and the national living wage has risen to £8.91 per hour from April.
Okay, thank you. So Chris, before we finish, we know in the last week and in recent months, we've also had queries from people who may be listening, people who have lost their job, who've been made redundant, or have seen a significant decrease in their household income over the last year, and there are more worrying months ahead. So what advice would you give anyone in that situation, anyone who's listening?
Yeah, certainly. There's a lot of people who are in that situation or looking ahead and know that it might be coming up with the changes to the furlough scheme, etc. And our team is here to help you. It doesn't matter what your circumstances are. If you give us a call, we'll be able to guide you through what sort of support you may be available, and whether that support you're available now in your current circumstances, or looking to the future, looking at what your future circumstances may be. We can give you an idea of how those changes may affect your income and potentially bring you into any entitlement to any benefits like universal credit, etc. And you can give the advisors a call on 0800 028 3008 or email us on hello@employersforchildcare.org. You can speak to one of our advisors and we'll be able to give you some sort of support as to how you may be able to look at those changes and hopefully get back into work as well.
Brilliant. Chris, thank you very much for sharing all of that information with us and with listeners. And thank you to everybody who has joined us for the Facebook Live today. Just remember, please, if you have any queries at all, the team, Chris and the rest of the team will be delighted to help. So please do get in touch. And if you have any further queries, please feel free to put them in the chat box and we'll answer those as well. Thanks for listening. Bye.